Welcome to Big Idea Investing. It's your host, Dylan Loomis. So Cathie Wood was just interviewed a few hours ago on Benzinga, and I wanted to get a few quick clips out to you guys where she touches on a few undervalued stocks and some other opportunities to take a look at right now. And of course, I'll add some commentary along the way. Enjoy.
We are very optimistic about Bitcoin in particular. And I think the big surprise to us, we had been expecting more institutional or professional interest. Meaning institutions starting to put it in their funds, and to see Mass Mutual put $100 million of Bitcoin into the general account. Do you know how many hoops that an insurance company would have to jump through to be able to do that? Now, it's only 0.001% of a general account. However, just to get it in there, unbelievable. What has surprised us is the diversification that companies like Square, Tesla, and MicroStrategy, the diversification into Bitcoin on their balance sheets. They are starting to build their cash positions. Can you believe 2 years ago, people thought Tesla was going to run out of cash? Now it's built its cash positions to such an extent that it's diversifying about 8% into Bitcoin. I think it's a great insurance policy. It makes a lot of sense. And it's not, meaning if we go into an inflationary period, cash will lose its purchasing power. Bitcoin will not. In fact, Bitcoin, as you can see recently, is gaining purchasing power pretty dramatically. It's what's called a deflationary currency. All that means is your purchasing power goes up over time. And so I think more innovative, tech-savvy management teams are saying, why don't we diversify? What's the reason not to diversify? And so I think this is going to happen more broadly. That's a very big deal. So Tesla put 8% of its cash. I think Square's up to 5%. MicroStrategy, all of its cash. And if all the corporations in the United States were to do that, somewhere in the let's just say the 1 to 10% range, just diversifying into Bitcoin, that would add anywhere from $40,000 to $400,000 to the Bitcoin price. So it would double the Bitcoin price at a minimum. If it were only 1% diversification, it would push the price up almost 10 times. If it were 10%.
So for me personally, I would just pick an amount you can afford to invest monthly, set a date, and start dollar cost averaging into Bitcoin and Ethereum every month. If you start trying to time your buys with swings in the market, you're most likely going to drive yourself crazy. So if you still have a zero exposure, now is the time to start investing monthly like you're making contributions to a Roth IRA, which by the way, if you're able to, you should also be doing. Next up, Cathie shares her excitement on NFTs, non-fungible tokens. I just did a video about this very topic called The Next Investment Frontier. It's linked below if you want to learn more.
Oh, no. We're very excited about it. In fact, Async ARK, did I get that right? Async Art, I believe, is a firm, a platform for artists, for digital artists. And what these artists can do, and I think we're going to try and do this ourselves through Async Art, is you can draw a painting. I don't know how to say it digitally, however, and then it can build up in layers. And the original artist holds the base layer. Anyone who wants to build on a layer on top to modify the underlying will have to pay a royalty to the designer. And I think the great thing about NFTs is the original artist is on record there forever. There's no way to change it. That's the wonderful thing about blockchain technologies, immutability. And so the idea that someone could create a base layer of art and have others build on top and pay a royalty in order to, build up the ecosystem and each one earn royalties, that's so fascinating. Someone said, yesterday I read that an Oxford University professor said, this kind of reminds me of photography, if you want an analogy. Those original prints from the famous photographs, those original films are incredibly valuable. The first prints, extremely valuable, though less valuable perhaps than the original film, and so on. So There's an analogy out there.
Honestly, this is such a fun space. It's about as speculative as it gets though, and I would say about 75% of the stuff out there right now won't have staying power, but there are some very real opportunities in gaming, art, music, and digital collectibles that is 100% going to change life as we know it. And I think the most overlooked aspect is the communities that are being built and the network effects, with NBA Top Shot and the athletes getting involved and interacting with people, and the same is happening with famous artists and social media media celebrities. So whether you like it or not, this is happening, and at the very least, a small percentage of the market is here to stay. Next up, Cathie talks about a few undervalued stocks, and I'll put the current prices and the 52-week highs up on the screen.
Well, Roku, everyone asks, okay, there's a huge transition from linear TV to streaming TV. And what would you invest in, or where would you invest given the $70 billion of linear TV advertising dollars that are going to disappear and go somewhere? Where would you invest? Most people would say Facebook, Google. We would say a lot of people know that. That is no surprise. The surprise is Roku. Roku is becoming the operating system of streaming TV, of connected TVs. It and Amazon are in competition, so to speak. But Roku put its own channel. It has started its own channel and is starting to buy content for it. Quibi is one example. It has just moved on to Amazon's platform as well. So we think those two, certainly in the United States, are going to take the lion's share of the connected TV market. And Roku is moving internationally and is finding really good success. And I think that's an upside that many people don't anticipate. Let's see, the other one, Zoom. Now, interestingly, I listened to their call yesterday or the day before, and I realized something. First of all, it's mind-blowing. Most stay-at-home beneficiaries, the stocks, they peaked in the summer last year. Zoom was cut in half from $600 to nearly $300 last week. Got the earnings report this week, and most people have been saying, okay, yeah, we're kind of getting back to normal. They got to slow down. Its growth rate accelerated from 365% year-over-year growth to 369% year-over-year growth, a $900 million run rate, which is $3.6 billion annualized. That's what people's estimates are for 2021. They're wrong. It's going to be much higher than that. The world has changed. And I think Zoom is it's playing in the largest part of the technology stack out there, the $1.5 trillion telecommunications part of the stack. And I think it's going to usurp a lot of the old telco infrastructure. So I don't think people understand that. So we're pretty excited about it, and actually like that the sentiment right now is so negative. People think this stock at about $110 billion is selling at an outrageous multiple to sales. It is not if our estimate for this year is right. In fact, it's probably undervalued. I know people think that's outrageous, but stay tuned.
And the last sector she mentioned was FinTech, and I'm working on a deep dive episode on this topic, as this is one of the most sure things and trends that I personally see playing out over the next 10 to 20 years, the transition from cash and traditional banking to digital wallets and digital banking on our phones and computers.
I think that FinTech is probably one of the most misunderstood of all of the technology platforms. Digital wallets are going to, we believe, gut banks. So remember I told you the indexes have value traps? We think banks are among them. Now, banks and energy are both having a nice run here, nice value run. We're happy because that means the bull market is broadening out. Very happy about that. But be careful about the value stocks that you buy. Digital wallets are not only going to do our banking, they're going to be bank branches in our pockets or pocketbooks. We're going to do our banking. We're going to take loans. We're going to pay debit on our Cash App or our Venmo and other PayPal accounts. We're going to buy stocks and crypto. That already is happening. Millennials are leading the way here. I think banks are facing an innovative dilemma, the innovator's dilemma, and I think they are going to have a hard time catching up. Old DNA versus new DNA.
But that's all I have for you guys today. Please take a second to like the video if you did. Consider subscribing for more investing content, and I hope to see you in the next video. I hope that you have a great day.